Miami open and not doing too much better. 4-1 declining to advancing stocks. Yes, the trade's back, but frankly, we knew all this story yesterday. Look at the sectors, the usual sectors hit by trade concerns. Material stocks weak, industrials weak, the semiconductors weak. Consumer staples holding up better than expected. They were in the green just a short while ago. The earnings front, and Jim mentioned this, it's about higher costs today. All of the big companies, Dow, DuPont talked about higher raw material costs, higher freight costs. Kellogg talked about transportation and packaging costs. Royal Caribbean talked about higher fuel rates. Clorox talks about higher commodity and transportation costs, although they're up a little bit here. This is all the theme about the consumer companies all throughout this quarter. We've heard pricing from them, mostly flat. Clorox tried to raise prices. They did. Packaging and material costs have been higher. Organic growth has generally been pressured. Gross margins have been pressured too. Brand value has been eroding overall. So it's been a tough time. No wonder. Look at the consumer staples this year. What are they down? 7, 8, 9%? That's a problem when you've got all of those issues, particularly margin erosion. So where are we? What's the major trends right now for the stock market? Remember we talked about this rotation from growth into value. That was a story for about 5 days. That trend is fairly weak. It's true we've seen some momentum in transportations and banks and pharma. These are value plays. But overall, the sentiment in tech still is bullish. I don't hear people abandoning tech. They don't want to. I get hate mail when I talk about that. Generally, I would say the overall trend is higher because whenever you get weakness in tech, you get rotation into other ones. That's why we're still hovering around that $2,800 level. I do want to note, though, pharma's had a great month. Ever since Lilly's numbers a little while ago, they've been on fire. This is straight up in the last 2 to 3 weeks. That's something that's very obvious right now. IPOs, we got two waiting behind me here. Cushman & Wakefield, one of the biggest commercial real estate firms in the world. I think the third biggest. 45 million shares, 17, right in the middle. Waiting for indications, don't have that yet, but that should open fairly well. And of course, we've been talking a lot this morning about Sonos. Hope you saw the CEO on earlier, 13.9 million at 15, and that was a disappointment, $17 to $19. Remember, this is not an LBO, but it is a KKR deal. KKR owns 22% of that. And of course, they compete with Apple and have a rather big ecosystem for Apple to support the competition right now. So we are just barely off the lows, Carl, 161 points down in the Dow. Back to you.